Two important sets of accounting standards, US GAAP and IFRS. IFRS, which stands for International Financial Reporting Standards. We'll have a very quick overview of the key differences between these two standards, the key differences I'm focusing again. And before I start discussing about the differences, let's have a very quick background of these two standards. One is US GAAP, which is US based. FASB, Financial Accounting Standard Board, they regulate it. Then it is, promoted, collaborated by SEC, which is Securities and Exchange Commission. Then it is AICPA, you call it American Institute of Certified Public Accountants. And mostly these standards are used in US. The other one is called IFRS, International Financial Reporting Standards. These are UK-based standards. IASB is responsible for developing these standards, International Accounting Standard Board, and these are accepted in over 110 countries. Actually, it is written here 100, but I believe it is more than 110. IFRS is becoming more popular throughout the world globally. In fact, this thing which we say that US GAAP, which has been or which is still used in in the US market, even IFRS is now becoming popular there. As we speak, this is 2021, and as of now, more than 500 corporations and large companies are using IFRS already in the US. So IFRS is also becoming popular in US. There is a project which is called CONVERGENCE project, because where it was decided that FASB, which was creating this US GAAP, and IASB, which is responsible for IFRS, they actually joined hands together, FASB and IASB. They joined hands together to create IFRS, and these IFRS are suggested to replace US GAAP in the US. So that is, of course, a project which would take a lot of time. It started back in 2008, and since then there is a convergence project is going on. And the idea is, the commitment is that one unique standards should be adopted globally, and we call it the Convergence Project. So it says that in 2008, the Securities and Exchange Commission issued a preliminary roadmap that may lead the United States to abandon generally accepted accounting principles. And as of 2010, the Convergence Project was underway with the FASB, meeting routinely with IASB. And then what happened that in 2014, SEC, Securities and Exchange Commission, which is in US, they expressed their aim to fully adopt IFRS reporting standards by 2014. Actually, it never happened so far, but the work is going on this way. And with the convergence of the US GAAP and the IFRS accounting systems as the highest authority over international financial reporting standards, the International Accounting Board is becoming more important in the US, which means IASB is getting more importance. So this is what is happening. What you should understand, that IFRS is even becoming more popular in the US, and we expect that in next 1 decade, probably it would replace this US GAAP to a large extent. Already so many companies have adopted it. Now, if we speak about the differences, now there are going to be a lot of differences actually, but I've just picked up a list of 10 most important one. Number one is rules or rules-based versus principle-based. We'll discuss this thing. Inventory method, inventory written down reversals, fair value revaluations, impairment losses, intangible assets, valuation of assets, investment property, lease accounting, and the last one is the financial statements. These are the 10 most important things which I have put up in the list, but of course the list is quite longer in reality. So if we start with the rules versus principle based, remember that US GAAP is rule based. This is rule based is your US GAAP, okay? And principle based is your IFRS. So in GAAP, what happens that you have been given very rigid, inflexible rules which you must follow, and you say that you must comply. And in IFRS, which is principle based, you say comply or explain. Comply or explain. Comply or explain means that either you follow, and if you are deviating from the standard, if there is any kind of deviation, then you must explain why it is. Actually, principle based means that you set the objective, okay? You set what is the objective of the financial statements and you try to achieve that objective. And then there is a lot of, we call it, there are two things. This is actually focusing on guidance. When you say rule-based, rules, they're based on guidance, which means that you have been given clear guidance, what type of transactions, what is the treatment, okay? But in case of IFRS, which is principle-based, you are given the guidance in the standards, but then there is a lot of role of judgment. So we call it judgment-based application, okay? So, guidance and judgment. Judgment means that you have the fundamental principles and this is the objectives, this is the principle. Based on that, the finance accounting professionals, they decide the treatment of the transaction, because there are so many different scenarios that every time you can't apply the same rule, or you can't apply the same, method. So sometimes you have to make different treatment based on the context, based on the scenario. And this brings a lot of flexibility to IFRS. Actually, principle-based means that it is very flexible. And this is one reason that why IFRS has become so popular, because it is so adaptable and it is so flexible. Whereas when you are here with GAAP, it is quite rigid. It only says comply and accountants must comply. Whereas IFRS is outcome-based, it is objective-based. So this is rules versus principles. And before I move forward, by the way, I must tell you that in IFRS today, as we speak in 2021, you have IAS standards, and IFRS actually consists of these two things. So IAS standards, they are actually the same one, but this is something, the standards which were produced before 2003, and these are the standards which came after 2003. So it is just the name, it was change of the name when this joined with this, convergence project. But the bases are same, methods are same, principles are same. So ultimately these are same. It is, you can consider that, okay, you've got some standards, you call them with IAS, some standards you name them with IFRS, but the name is only dependent on the dates, okay, before 2003, after 2003. As of today, we have 29 IAS standards and we have 16 IFRS. Actually, there are 2 more IFRS, but they are not in application. So the total number of standards which you have today is 45. In case of IFRS, our focus is on IFRS. Second difference which you speak is about inventory methods. So as accounting professionals, you know that there are different methods, LIFO method and FIFO method and weighted average cost method. So if you talk about GAAP method, US GAAP allows LIFO method and FIFO and average all 3 of them. Whereas IFRS does not allow. IFRS does not allow the LIFO method. So it means that under IFRS, you have got only 2 methods. Under IFRS, you've got 2 methods. One is FIFO and one is AFCO, weighted average. And weighted average is recommended. If you cannot use weighted average, then you use FIFO. Whereas in GAAP, LIFO is also allowed. IFRS does not allow LIFO method. Third thing, now, why do they not allow? We are not going to discuss here because otherwise it will, make too much long video. Inventory write-down reversals. So write-down reversal, what happens that both IFRS and GAAP, they allow that if your inventory loses value, you have to write down the value. And that makes sense because inventory has lost value, so you must decrease the value. But then what happens that, what if in case the value goes up again? Now, GAAP does not allow that reversal. IFRS, it does allow. So if we go back like this, we say both methods allow inventories to be written down to market value. However, if the market value later increases, only IFRS allows the earlier written down to be reversed. GAAP will not allow such a reversal of inventory valuation. Number 4 difference is fair value revaluation. So we have been doing revaluation of assets, okay, revaluation of property, plant and equipment, revaluation of tangible assets, intangible assets, and so many so. So IFRS, you can do revaluations. That is very common, and revaluation could result in increase or decrease. So you are adjusting the balance sheet value with the market value. In GAAP, revaluation is prohibited except for marketable securities. Except for marketable securities, you don't do revaluation. This is difference number 4. Number 5 is about impairment losses. Impairment means when your assets, their market value suddenly goes down, the asset then loses value. And in that case, you have to bring down the balance sheet value. You compare it with the market recoverable amount. If you remember, you compare the net book value with the recoverable amount. If the net book value is more, recoverable is less, you bring down the value. That is called impairment. But then what happens that it is possible the asset which in past had lost value, it may recover value up. So that is also called, increase in value after impairment. So IFRS allows you to do reversal of impairment. So which means that, let's suppose that you had an asset and at certain point in time, the value dropped, you brought down the value, you impaired the asset, but then the asset probably it gained value and you make an increase. And that is called reversal of impairment, which means any impairment which was charged in past, you reverse it. IFRS allows it except for goodwill. So IFRS says that if you have charged impairment, you can reverse impairment except for the goodwill. This is the position of IFRS. Whereas GAAP does not allow any kind of reversal of impairment. So under GAAP, it is not allowed, it is prohibited. So this is difference number 5. Difference number 6 is about intangible assets. If you remember the criteria for intangible asset, Pirate criteria, so you have research cost, you have development cost, and the development cost we capitalize. So if we are creating an intangible asset and we are spending or investing money on that, we consider it as an asset. Because the development cost we capitalize, we take them into the balance sheet as an asset. That is the IFRS treatment. GAAP does not allow it. GAAP says that intangibles, when you develop, whatever expenses are there, you spend money, you expense them out into P&L as expenses, except for internally developed software, which would be used externally. So only for the software thing, they allow you to capitalize your development expenditure. Otherwise, you cannot. This is difference number 6. Number 7, if I speak, valuation of assets. So under both sets of standards, long-lived assets, which include property, plant, and equipment, are initially valued at acquisition cost. Under both GAAP and IFRS, fixed assets are depreciated. We remember that depreciation we charge. But if you have done IFRS, you know that for complex assets, you do component depreciation. For example, in case of an airplane, you divide the airplane into 3 components: the body, the engine, and the fittings. Body has a life of 20 years, engine has life of 10 years, internal fittings have life of 5 years, and then you depreciate 3 components separately. We call it depreciation of components. This is something which is required by IFRS because it is not an option. Actually, IFRS requires you to do it. IFRS requires you to do it. But in case of GAAP, again, this is different. Component depreciation is allowed under GAAP, but it is not mandatory. So under IFRS, it is mandatory. Under GAAP, it is allowed, but not mandatory. Difference number 8, investment property. So the tangible property, PPE, we have a category which is dealt under IS 40 standard investment property, standard IS 40. Which says that if you have, and it has to be land and building, okay? Land and building comes under IS 40. Investment property, if you are not using such land and building in the business, if it is not used in your core activities, it is not used in day-to-day operations, you classify it into a separate category called investment property, IS 40. So I have 2 offices, this one office, this office. This office I am using, and this office I have given on rent. So for this office, the standard is called IS 16, property, plant, equipment. This we are not using in our business, but instead we have given it out on rent, or probably we have left it for market price gain. This will be treated under IS 40, investment property. So a separate standard is there under IFRS. Under GAAP, there is no such standard. So GAAP does not have a separate standard for investment property. Everything comes under their long-term assets. So investment property concept is missing from the US GAAP. Number 9 is lease accounting. Here, IFRS 16, lease accounting, in GAAP leasing and IFRS leasing, there are a lot of similarity. The only difference here that in IFRS, we have short-term lease expense, leases for short-term period, and we don't consider them lease because we consider that it's a small value, less than 5,000. Let's call it a service contract and expense it out. Small amount lease, we call it, which is available in IFRS 16 leases. GAAP does not have that permission as well. So GAAP has no such exception. So this is number 9. And last of all, number 10, financial statements. Again, I'll speak very little. I'll start with the balance sheet, the presentation. If you talk about GAAP and you talk about IFRS, so its items are same almost, but there is a difference in order. For example, IFRS says least liquid to most liquid, which means first you will write down PPE, property, plant, equipment, and cash, which is the most liquid, that will come in the end. Whereas GAAP is from most liquid asset, most liquid, to least liquid, which means that GAAP balance sheet will show cash as the first item and PPE as the last item. So this is one difference in the balance sheet. In case of income statement, again, you have got GAAP and IFRS. So IFRS allows you to present your expenses in two different categories based on function and based on nature of expenses. Whereas in GAAP, mostly it is done with the nature of expenses. Then you've got cash flow statement. Again, there are some issues, especially regarding to dividends and interests. For example, again, IFRS is more flexible. If you have, and mostly it is about dividend and interest, you say dividend paid. So dividend paid, you might put in operating activities, you might put it in financing activities. GAAP, it says that dividend paid is under operating activities. Similarly, you have interest received. If you have interest received in IFRS, we put it as investing activity, interest received. And here you again put it as operating activities, this interest received. So these type of differences are there, presentation differences. So that's all. I mean, these are the 10 very common major differences between IFRS and GAAP. Of course, there is a long list, but for a short video, I think this should be enough for today.